Hello guys, welcome back to the channel. This is Hassan, your boy, and today we have Bitcoin on the chat. Something bad happened on Bitcoin, and I know a lot of people lost money yesterday. However, I had not entered this trade, Bitcoin, but we shall be going through it together to see what really happened. But I've been getting feedback, good feedback about the videos, so guys, keep the feedback coming and keep also track of the new content that I'll be sharing every day. I told you I'm looking for a camera, and soon I'm going to be doing live content, making videos that you guys can be able to see me, such that you can know the person you're talking to. And I don't want you to think that maybe you're talking to a robot. No. So without further ado, you guys first subscribe to the channel, and then I'll give you 5 seconds to subscribe, and then we proceed with the video. And yes, you subscribe to the channel. We are going to 200 subscribers. So far we have grown to 170. So we are pushing towards 200 subscribers. So guys, subscribe within 5 seconds. Be part of the community. Let's grow together, and then I'll go straight to the video. So guys, subscribe to the channel. Subscribe guys. We continue with our video. Subscribe guys, hit the subscribe button. Also, if you have not yet understood our strategy, you can go through the last previous videos. I think 2 or 3 videos will help you to understand the strategy very well, such that you can know what to expect on the channel. Okay guys, I hope you have subscribed. Let's now proceed to the video. So this is Bitcoin, and this is the daily time frame. I told you guys I analyze all the markets on the weekly, and then I be following. When the week starts on Monday, I be following day by day to see whether my trades are going to play out or not, as well as placing them. So this is Bitcoin, this is the daily time frame. Now what happened is Bitcoin has been in a bullish trend for a long period of time. It has been the bull run, has been going long. If you bought around this area here, you'd be holding up there. However, it has been so it is what they call a bull run, or it is what they call a hyper bullish market, that it does not give you re-entries. It gave us an entry here. We got an entry here from Bitcoin. So if you entered here, you were able to, and this was the daily time frame, you were able to hold your trade up here. Then there was another entry here, up here. So once it gave you an entry here, there was no any other entry here up to here. It gave you another one, you entered, we bought around here, Bitcoin came here, and then it still wanted to go down, it went down, came here, we bought around this area, it went up. Now it is dropping. So what has happened on Bitcoin is it has gone up, so we wanted to buy from here and then push it to the higher highs. However, it has not been possible, and there are 2 reasons why it has not been possible. But first I'll give you the first reason why Bitcoin dropped. The first reason why Bitcoin dropped is because many of the pairs have yesterday at around 3 to 4 a.m. in the morning had spikes up and down. Why? Because of 2 things, fundamentals. One, we had a plane crash in India. That one did not obviously affect much, but India being a big economy, it would affect the US dollar. 2, we had the war that erupted in the Middle East between Israel and Iran. I don't know if I mentioned them, whether they won't affect this video, but that war that happened in the Middle East was the one, I think there was an attack where Israel attacked the other party. So at that time, most of the pairs were shooting up and down here and there. Most of the pairs were shooting. So I think that same thing affected Bitcoin, because the way it shot is the same way you would see NZD USD AUD. There is also JPY pairs, they shot up and down. Apart from the JPY, that one was okay, but this card JPY, I think also GBP JPY, many of the pairs were shooting up and down because of the fundamentals. So, and that is not something that you would avoid, because remember, this thing happened in the night and no one would anticipate that Israel was going to attack Iran. So it was something that was going to affect you. Personally, I was in the it was AUD JPY trade. I went to sleep when it was rounding at around 15 pips, but then I had moved my stop losses above, I think, on the edge break even. So when price spiked down, I was stopped out for break even. So I didn't lose anything, but also I didn't gain anything on that trade. So this trade was supposed to be entered on the 4-hour. As you see, very clean demand zone, very clean demand zone. People who have been on this channel, you know, these are the trades that I would like to take. You have a support area here, which a resistance area which turns into support, and you see how the basing is very fine, two indecision candles and then a bullish engulfing candle, a bullish engulfing bar. This was good. Initially I thought we could buy from here, but the bearish momentum was so high, so we could not buy. I had told people to buy from here, but the bearish momentum was so high, so we could not buy. I was not in here, but when it came here, definitely I would enter. However, I missed it. But sincerely speaking, if I was on the charts by the time this trade reached here, I was going to enter for a buy. There is no way I would fail to enter into this trade. First of all the strategies were aligning. One, we were in a bullish market. Good. We created a valid demand zone. A valid demand zone, we had two incision candles. We had a bullish engulfing candle, and it's not just an engulfing candle, a marabuzo candle. And then we had this resistance standing to support. Let me just mark for you this one here. This was one of those A+ setups. Resistance standing to support. This is resistance standing to support, and then we have an indecision candle, and then we have an engulfing marabuzo. So guys, this is one of the trades that I would take. I missed the trade because I was not on the charts, and that one saved me because it was going to be a huge loss, because look at the way it spiked to the downside. Even up to now, it has not managed to come back up. So that is one. And now, how do we enter back into this trade? We are having a 4-hour demand zone. We're having a 4-hour demand zone around this area here. So how do we enter in the trade? We shall just wait and see if price can come to this area. This area is so big, we can make it small by going to the lower time frames. Whoa, it's even bigger. Can make it small by going to the lower time frames. Yes, I think we can find it here, but I wanted to use the week. I normally don't want to ignore that week. Normally don't want to ignore the week. What do we have on the 1 hour? Nothing. What do we have on the 30-minute? We have it even up there. No. You prefer the 4-hour. So guys, that is what we have. So we have to wait for price action to come here, but we shall enter only with the confirmation from the high time frames. Why shall we enter with the confirmation from the high time frame? Excuse me. Because this week we have to put into account this week. So we shall wait for price to come, show us some confirmation here, and then we shall take it to the upside. However, if we miss that, we have a daily demand zone waiting here. So we can just wait. If we miss it, if it goes through this, we wait. I'm sure the demand zone on the daily is going to hold daily. So we have a demand zone there, and also we have support and resistance at that same area. So this is definitely the area. If this one doesn't hold, we are buying from down here. Okay. That being said, I'll go back to the 4-hour. There's something I wanted to talk about, but I just wanted to highlight this issue that happened yesterday on the Bitcoin. So there's something I wanted to talk about. That is what I'm going to be talking about if I go to if I end the video. Okay, so now you have many of us have small accounts, and we'll be growing those small accounts using guys, you excuse me a little, let me just pick this call and then hello. Okay guys, I had to receive that call, but it's done. So something I wanted to talk about, it is about holding trades. Most of us have small accounts, and we are always being encouraged that, oh, now you have to hold your trades. If you don't hold your trades, you're not going to grow your small accounts. First of all, the first thing that has been holding us back is entering the trades. You analyze the trade very well, and you know that this is a buy, but where to enter from. So now that has been simplified with the emergence of demand and supply. Demand and supply simply tells you that this is where you buy from, this is where you sell from. Like for example, I have a demand zone here, I have a demand zone here, price create a demand zone here which you used to buy, another one here which you used to buy. So price will tell you where to buy and where to sell from with demand and supply. Now, when holding your trades, this is what people don't tell you, that oh, you have to hold your trades. You cannot just hold your trades like from nowhere. Yes, you have bought, but do you know where price is going? Do you know where it is going to turn around from? Because price is not going to buy forever. As long as you buy, it won't buy forever. It is going to reach a point where it's going to retrace, and during that retracement, it can, like Bitcoin can give you easily 200 pips, then retraces back retraces back and takes away those 200 pips. So what happens is, when price buys, let's say you have entered from here, you have entered for a buy, you must know where you're getting out from. That is what gives you the confidence to hold this trade for a long period of time. How? For example, if I have let's say I have my demand zone here, and then I entered into a sell in this supply zone here. Reach that supply zone, I entered into a sell. Then I sold from there. Stop loss up there. So in order for me to be comfortable to hold my trades, I have to know where the next demand zone is, where next I'm likely to buy from. You get my point, guys? In order for me to hold my trades for long, for example, this is 1, 2, 3, 4, you get at least 1 week, 6 days up to here. In order for me to hold my trades for long, I should know that my take profit is at the next demand zone. So as the price is moving, I'm just trailing my stop losses. And the second thing is that I have to be able to accept the fact that I can lose everything that I have gained from the trade. What do I mean by that? It is simple. The moment you enter and the trade moves into profits, you're going to be forced to move your stop losses to break even, and then let the trade run. Meaning, it can come back and hit your break even, and you lose okay, you don't lose anything, but all the time that you've invested in would have gone. It can go and hit your profits, and then you take all the profits. So either way, you have to be ready. However, in order to be safe, you have to move your stop losses above break even, and then let the trade run, knowing that if it comes back and hits my stop loss, my break even, I'm okay. I'm willing to go with nothing. But if it's going to go there, I'm willing to hold for more than 5 days. Then another thing is, if you leave your stop losses up here, because I've had some people say the moment you open a trade, you're okay with losing that money that you have risked. So do not move your stop losses, do not move your take profit. Let the trade play out until when you either win or you either lose. But that one is wrong. I know people say that there's nothing wrong in forex. Like it depends on how you think. For me, that is one of the things that I find that is wrong in forex. Why? Because if you don't use trailing stops and you open the trade, yes, I'm okay with losing this amount, but I'm okay with losing it if price moves up to here and comes back and takes me out. That one I might be okay with it. However, what I'm not okay with it is that price has come and moved up to around here, and then for no reason it returns back and takes me out. That one I'm not okay with it. I'm not okay with it. That is where trailing stops come in. You have to trail your stop losses such that in case anything happens and price does not reach where you wanted it to reach, then you're not losing everything. You're not losing everything. You are at least going with something of, let's say, this was your target, and then price has moved up to where it is, and you trail your stops up to here, up to there. Meaning, if price comes back up to this area, you take something off the table. That is around 20 pips. You take 20 pips off the table. But I want you to note something, that price can still move up to here, take you out for 20 pips, and then comes back to your target. That is one scenario. Price can move up to here, take you out, and still proceed and go to the upside. That is another scenario. So which one would you take? The safety path. That is what you take. Trail your stops such that if price decides to come back, if I had not trailed my stops yesterday on AEDJPY trade, price was going to take me out, and it was one of those trades that I would enter. I had already entered. So if I had not trailed my stop, price was going to take me out. So guys, at least try to be careful when you are in distress. Trade management is also something that is serious when trading these forex assets. Okay guys, I think that is all for today, and if you have not subscribed, guys, kindly subscribe. If you like the video, well and good. You can also share it with your friends, and also don't forget to ask me anything you want in the comment section. I'll be able to answer. In case there is any video or anything you want me to do a video about, kindly tell me or request for it. I'm going to be doing definitely a video about that, but share anything in the comment section. So that is all guys, that's all for today, and it has been your boy Hassan. Kindly subscribe to the channel. We shall meet in the next video. Bye.